The offshore, the dollar market, is that likely to pick up anytime soon, do you think?
Yeah, I think it's a good question. I think it will depend on a few factors or drivers. Number one, we really want to see this recovery of the Chinese economy from the COVID pandemic. The Q1 and Q2, the recovery was not as strong as we expected. But I think going forward, the Chinese government has launched a lot of stimulus policy, including monetary policies and physical policy, and even the deregulation, and which we will see how this policy will play out in the next few months or few quarters. Number two, so we want to see the investment, the interest environment in the U.S. That will be another very key important drivers to the global economy, and will make a lot of impact to the financial markets, capital markets as well. So we'll see that as well.
The onshore, the RMB market, which you say is actually looking pretty healthy, thank you very much. Where's the money going? What kinds of deals?
Primarily, those investments will go to the technology sectors, so-called hard tech, deep tech, which are very supported by the government policy, and also it's also a favorable market sectors by the capital markets. So I think a lot of RMB funds are making investment in those technology, innovation related sectors.
More specifically, health tech or other?
No, it's more health tech is one part of them, but more including the clean tech, renewable energy, EV, and semiconductor. This kind of things are very popular.
Fintech as well?
Fintech, not really, because fintech has been a very highly regulated sector, which some RMB funds may want to stay away from.
You know, when you meet foreign clients, investors or people basically from outside, and they want to know, they go, Mingchen, listen, we know that private industry, especially tech in China, has had a pretty hard time the last 2-3 years, right? Regulatory crackdown, etc. Do you feel, and are you telling them that, look, it's over, it's safe to come out now?
Yeah, I think the regulatory changes in the last 2-3 years on the technology sectors was more on the some internet-related sectors, online education, O2O, and that kind of sectors. But right now we're talking about the deep, hard technology. Many of them are related to industrial sectors and also manufacturing sectors, which is a little bit different from the regulatory crackdown in the last few years. So I think going forward, the government will continue to launch a lot of business-friendly policy to those technology sectors in general.
Back to the offshore, the dollar market. We've had, obviously, the U.S. Commerce Secretary, Gina Raimondo, visiting China just very recently, right? And some of her comments were eyebrow-raising and maybe a bit worrying as well, although she claims she was just repeating what she was being told by U.S. businesses, that China is uninvestable. When guys in the PE world hear comments like that, what do you think?
From the investment professionals' perspective, we still believe China is investable. Because we still believe the long-term economic growth in China, and also some structural changes in China, those changes in those environment will continue to present a lot of investment opportunities. But there are some specific sectors are relatively sensitive, and also can be are targeted sectors by some restrictions by two countries, right? So as professionals, we want to avoid those sensitive sectors, but to put your money work in some large, sizable sectors with a very long runway, and so you have to focus on the fundamentals.